Hey, this is Raghee Horner, and I want to talk a little bit about what we all see as another significant move higher on the Euro-US dollar and effectively blowing through that resistance that I was hoping would hold at 23.6. Now, obviously, we've had a number of positive, bullish stories that are helping this euro stay up and continue to rally. So when I look at that 23.6 and from the standpoint of the 240 swing trade that for a few hours was looking great, then another headline came and it got blown out. Look, we all get stopped out. This was certainly a case. So it's not all about showing all the good stuff. It's all about what happens when you're on the wrong side of momentum, and that's exactly where I was. Take a look. This is why we have stop losses. Now, even though I think that my overall directional bias is still correct in that it's bearish, and I still feel that at some point we're going to run out of headlines. And by the way, if you want to see my take on the events of today, the culmination of the rumor of the Chinese wanting to step in and buy Italian bonds, the culmination of Sarkozy and Merkel saying that they are convinced that that Greece will stay in the EU. Notice, however, they didn't mention the word default. So I don't think we've ruled out Greece defaulting. I just think that we're ruling out Greece getting kicked out of the EU, which of course, because the unceremonious exit of Greece was part of what was bearishly affecting the Euro-US dollar, that expectation, that baking of the cake got unwound. So we have that, and then today, the Fed, the ECB stepping in, adding liquidity to those Euro banks, making it more attractive, making it more affordable for those dollars to be lent to those European banks. That was a liquidity problem, and they stepped in and made something happen. Now, I will say, there's so much pessimism out there. Let's at least give the ECB some props for some proactive, some relatively proactive, yeah, they're throwing spaghetti against the wall, but and they're hoping something's going to stick, but it's the consistency with which they keep throwing spaghetti. They are trying to proactively deal with this problem, and it's going to be the culmination of these smaller bandages on the larger wound that at some point, I think, when there may be eventually a Greek default, there are going to be processes in place by which they can then, plug them in and deal with a liquidity problem. Unlike what happened here, we didn't have any of those processes in place, and we had a liquidity problem all the way up to GE. So has the ECB learned from what happened here in the US? I think so, yes, and I think we need to give them props for that. All right, so technically speaking, all right, what are we dealing with? Directional bias is still down. We were talking about the 23.6 yesterday. Again, blew through that level. There's a reason we have stops in place. I took a taste at the 20 period simple. I put the rest of my position in at the 34 EMA low, along with that 23.6, along with that 3750 major psychological level. We blew through 38. We blew through the top of the wave, which, as you can see here, at the time was positioned about 38.24. And, I'm really glad that I'm not along for what has been a very strong ride up towards 39. So, yes, I took a hit. It could have been much more if I had been double mule. What's double mule? Half as smart, twice as dumb. And that's what it would be to hang on to this. I have to acknowledge the fact that I can be right in terms of directional bias, but I can be wrong in terms of where the selling pressure is stepping in. So now what? Well, it's kind of back to the drawing board in many ways, because the only opportunities that are presenting themselves for me right now would be the trend following bullish plays. And I am a little hesitant because it is counter trend, but I'll keep those hesitant buys, those situations where I might want to go ahead and engage the market long, I'll keep them on short-term time frames so I don't need the longer-term expectation, don't need a longer-term move against the bearish directional bias. So I don't want to have to rely on longer-term organization, bullish sentiment, a bullish momentum in what I think is still overall a bearish market. Now, we talked about all those headlines. What happens when we run out of headlines? That's the question here, isn't it? What happens when we don't have a China story? What happens when Merkel and Sarkozy don't step up and prop the currency up? What happens when we don't have what this basically amounted to a coordinated intervention? What happens when this does not continue to happen? My feeling is the overall trend will resume. Okay, I'm not saying we're pushing the new lows, but I think that at some point we have to talk about exhaustion. And by the way, here we are meeting the previous high. You can see here, this is 39.35 right here, 39.35. Today's high, 37.02. Okay, so 39.35, and again the high here, 39. What did I say? 37.02. What am I talking about? 39.35, and here we have the 39.35 again. Wow. Okay, it was right on. I thought it was closer to 40. All right, hit it twice. Okay. For those of you that are on the MT4 platform, you know how infinitesimally small the text is, and I'm about 1.5 feet away from my monitors. So again, the high here, 39, and actually it was 39.35.7, and this is 39.35.9. Okay, so talk about a level at which it's abundantly clear where the bears are willing to step in. Okay, and having said that, with them revealing where they're willing to step in, so it's 39.35. There we go. I like to make this red because it is resistance. So having identified where they're willing to step in, if we can manage to get below and stay below that 38.2 like we are right now and heading into Asia, I'll take the same opinion that I had yesterday. It's a bearish sign. And by the way, I firmly stand behind the consistency in, I want you all to have consistency. Don't suddenly change the tune just because one day disproved one resistance level. We have a second one here. It's a second hurdle for prices to prove their ability to maintain the acceleration through, in this case, at 38.2. And what else? What else are they trying to maintain? That acceleration through the 3900 major psychological level. So with the double top here, 39.35, pushing us down lower below the 38.2. And again, I'll say it, that I feel that we are in overall a bearish market trend. The fact that we're closing below the 38.2, the fact that 3900 could not become support, 3700 could not even become 3800, sorry. 3800, will it act as support? Well, we're at 3877, so 3900 is, again, the resistance level we're going to watch, that area between 3900, 3935, slippery slope. Had we not gotten, and this was the point I was trying to crescendo to, had we not gotten the news of today, the Fed and the ECB, the coordination, the injection of liquidity to those Eurozone banks, I firmly believe we would have held our ground between 3750 and 3800, and that we would even more so likely seen a pullback on the Dow. We're up on the Dow about 160 points as we're 10 minutes from the close. 76 is holding on the dollar index. Let me show you a quick view of the dollar. 76 is holding, as is the 38.2, as is, and I wanted to mention this as well, 200 period simple. How about we take a look at the Dow Jones Industrial Average? Yes, we are up into the resistance of the wave. We did get above 11,430. Making that breakout was pretty important. But again, I just don't think we had the legs to get this high without the news, without another big headline propping up the euro and encouraging this risk appetite. So I'll be watching the Dow futures tonight very closely through the YM contract. And I'll be watching the dollar index very closely through the DX contract. And what'll be very important is whether or not 200 period simple moving average supporting bulls and the 38.2% Fibonacci retracements supporting bulls will stay in this, and whether or not we're going to have another headline that will make the run for cover or not. Again, I think they're ready to resume the trend as long as we don't have another kind of fundamental story that overrides everything. That's what's been pushing this year up higher. Okay, technically speaking, there's no reason that the downtrend should not resume once this fundamentally driven optimism is done, once it runs its course, once we run out of headlines. That's my take. Let's see what happens. Proof is in price, right? I'll see you tomorrow.